back to the Everyday Growth Advisors live stream, the last one for a little while. I hope you guys are having a good morning or a good evening. It's going to be a pretty quick market breakdown for you guys and just a summary of the week. Market saw a little bit of a whipsaw this week, and we are seeing lots of trapping on both sides of the aisle. Bulls and bears getting trapped left, right, center. We may see a quick flush in the NASDAQ today after being sold off, but mainly we're looking at a general pullback of some kind to keep this downtrend in check. Okay, there are a lot of things going on at the same time right now. There's too many things going on at the same time. Let me focus on breaking down Tencent first, which is the ticker of the week. And then after that, we're going to continue everything else. Okay. So Tencent broke below the technical pattern that we were looking for. It's now heading into the demand zone, which is the low should be 76. If we break below 76, then this opens up further downside to 72 on Tencent. China's still grappling with, or rather Chinese tech still grappling with, recovery. And this is going to be something that we're going to watch for today. There seems to be a rally that's going on in tech right now. Yeah, big rally. I'm not sure why. Let's see. Was there any news that was posted? Yes, I think there was numbers, right? Okay, so U.S. Unemployment rate at 6.1%. Consensus was 5.8. Wait a minute. Non-farm payroll numbers also came out today. So let's see. Non-farm payrolls were worse than expected. Unemployment rate was worse than expected. And participation rate was a little okay. Manufacturing payrolls were down big time. Private non-farm payrolls were down. And so we are possibly rotating into tech as a play on continued crisis. Interesting. Okay, that may be the play here. That might be what markets are pricing in for the time being. 10-year yield falls after jobs report. Okay. Interesting set of circumstances that are happening right now. So let's try to make sense of this right now. The news just came out right now. So this just came out right now, 3 minutes ago. So non-farm payrolls were actually much lower than expected. Interesting. Previous was 770K, and we have 266K instead. So job market is actually suffering, and that's actually causing a lot of unemployment, which is reflected by the unemployment right here. I think the market was betting on reopening stocks, and we were having the sector rotation to point towards that. But now big tech being bought again, on the rise of a possible continuation of the reopening. So continuation of possible painfulness. I think that's what's getting priced in a little bit. But we'll see what happens. The market's whipsawing way too much these days. Okay. Going back to what I was saying about Tencent right before I was wondering what was going on with the news. We'll come back to the S&P 500, NASDAQ, and Dow Jones futures in a second here. Tencent will have to find support at the $72 level, and all Chinese tech would have to do the same in the coming weeks. Okay, so great time to purchase this for a swing trade, though, I would say, if you were looking for that kind of a trade, a swing trade. U.S. 10-year yield plunges more than 10 basis points after jobs report. Okay. Let's have a look. Interesting. Okay. We didn't even go up to the 2.0s or the 1.8s, which is what we were projecting. Well, we made it close. We made it to 1.77, and now the yields are coming back down again. This is going to be good for tech in some degree because lower rates like this. But then again, if the discount rate starts, creeping up, then we're gonna have the same problem again. Market was pricing in a rate cut. That's the reason why value stocks and consumer defenses were being bought. But now we're looking at a counter rotation again today, right? As of 3 minutes ago. We'll see if it actually holds up though. It's really not sustainable at this point. We'll see what actually happens throughout the day today. It's going to be an interesting trading day. I'm not going to be trading today. It's just not a market that I want to trade in. I have hedges against the market, and I'm going to be keeping those hedges for the foreseeable future for a while. Bloomberg News, not really reporting anything much. Futures climb before drop data. China's rocket unlikely to cause damage. There was a rocket in space that's going to drop to Earth, possibly land on land, but it's not going to do that anymore. Chip demand fuels biggest jump in Taiwan exports since 2010. Hong Kong loosens quarantine for travelers. Honestly, Singapore is going back into lockdown tomorrow again. We're going back to phase 2 pretty much. Just so you guys know. So yeah, that will be interesting to see what happens there. And yeah, okay. Let's have a look at the Wall Street Journal. Grabs through SPAC merger, heralds Asia's next tech boom. Stock futures tick up ahead of jobs data. Tax plan takes aim at Trump era initiatives. Okay. Barclays. Energy and financial still being a very big contributing factor to the Dow Jones Industrial Average. I'll talk about this in a second now. But how are you guys doing this morning? Can I get a couple of people saying how are you guys doing this morning? Haven't heard from the chat in a while. Pre-market movers here, looking at almost much of this moving up higher and higher. Banks getting sold off here. Unemployment down means people making less. People making less stimulus, less money made by banks, less economic stimulation. That's good for tech, but not good for anything else. Let's see here. Okay. Okay, Apple and this, all big tech moving, except for Tesla, not really moving that much. Nasdaq, okay, Moderna, PayPal, all right. Peloton up 6%. All right. Cool. Treasury Yields, let's have a look. 1.58 today, dropping even further to 1.5 already for the 10-year. So we dropped about 10 basis points. That's a pretty big drop, 10 basis points. Okay, now another thing. S&P 500 dividend yields continue to creep lower, 1.38% this month, which means to say the value of stocks versus the earnings that these stocks are putting out are creeping lower. Dividends that companies are paying out are smaller compared to the prices of the stocks. You can imagine what happens when the S&P 500 dividend yield goes this low. We haven't been this low for a long time, okay? Just so you guys know. If we look at the 10-year, which I don't think I can look at. Yeah, I can't. Historical S&P 500 dividend yield. Let's have a look if I can find here we go. By year. So the last time that we were this low was 2001 during the dot-com era. Do you guys see this? The last time we were this low was during the dot-com era when stocks were extremely expensive, and now we're approaching those levels again. S&P 500 dividend yield is very low here, and we may see continued pressure on the market here if things continue this way. Okay. You wouldn't want to hold the S&P 500 if bonds are paying you higher. That's the point that I'm trying to make. And let's see over here, 5th May, 7th May, 4th May is Intel director bought shares. That's something to take note of. Intel director bought $249,000 worth of shares. On this dip. Smart guy. Smart guy. Who else? What else? Amazon, Bezos sold, what is this? 360 million, 684 million, 300 million. And another 171 million. That's what? 1 billion, 1 point something billion? Amazon Jeff Bezos sold 1 point something billion shares of his stakes, and he still has 52 million shares of Amazon. Yeah, he's rich. Probably raising money to go enjoy retirement lifestyle. Can you imagine having $1.6 billion in your bank account? Zam, son! That would be Amazon. 1.6 billion, man, in your bank account. That's a lot of zeros, guys. What would you buy with $1.6 billion? What's the first thing you would buy? Okay, let's do the breakdown here. So, now, I know some of you are hecka confused what the heck's going on. So let me try to make sense of this in a way that I can. Okay. The story started to unfold when we were looking at the recovery after Corona crisis happened last year. Okay. And when Corona crisis happened last year, what was happening was mainly we were seeing a lot of money flow into financials and energy, and well, not energy right away, it was tech mostly and financials. Why? Because people were starting to price in a recovery of the economy. Okay. Then came along where tech was fully priced in, and we had a little bit of a sell-off in February, March, which was the tech sell-off, right? If you look at the NASDAQ, we had the tech sell-off in February, March, right? Which gave rise to market pricing in other activity in terms of energy, consumers discretionary, consumer staples, materials, etc., etc. Okay. And financials as well. Now, in the past couple of months, there was a lot of talk about interest rates. And interest rates were priced in because people were starting to price in the idea that the Federal Reserve will increase interest rates on the discount rate. And when that happens, banks tend to benefit from those situations. Okay? So there was that confusion again. And then, at this time, the continuation of the economy reopening plus the continued speculation of interest rates rising caused financials and energy to go on a very big rally, right? And those are very big chunks of the Dow Jones Industrial Average. And that's why the Dow Jones Industrial Average has been the strongest performing member of the three indices since then. Since March, it has been on a complete uptrend, right? Even a NASDAQ hasn't had that much success. NASDAQ kind of had that kind of success, but then has been finding trouble, also finding footing there, right? And the S&P 500 has been kind of like the average between both of them, kind of doing somewhat okay, somewhat not okay. It's going through its ups and downs. So right now, as of today's news, the one that just came out, We saw unemployment again slow down. We saw non-farm payrolls go down. What does this mean? The economy is not recovering as quickly as we would expect it to. What does that mean? That means that, the Fed is going to take a little longer to raise interest rates. The Fed has said they're going to be extremely patient to raise interest rates. What does that also mean? Less people are being employed. Unemployment rate is creeping up. So people are possibly taking advantage of this situation to stay unemployed, or the job market is not being stimulated enough, right? So there's all of those things being played into this factor right now. This poses multiple confusions for the market, right? Right now you'll see tech is buying up, Dow Jones is selling off, rightfully so. But then by the end of the day, you might see the complete reverse happen. Market makers themselves are greedy and they don't know what to do, so they are trying to get both ends of the market as well. They're trapping bears and then trapping bulls as well. What I do know though is on a daily chart, the S&P 500 is still pretty far above the moving averages. Okay, pretty far above. And we are already up at the 78.6 Fibonacci extension from this previous swing high to swing low. So we're seeing kind of a topping out pattern here. But we'll see if we get a double top. If we do, then we'll see another flush down. As of right now, we don't see that yet, but we'll see. We'll see what happens, right? Now, if tech does indeed buy up today, that will set up the precedent for the NASDAQ recovering while the Dow Jones selling off. Now, yesterday, that was actually the reverse. The Dow was buying up and tech was selling off. So we're seeing a complete reversal from yesterday's price action. And this can mean that institutions are rotating, or it could mean that they're temporarily holding up prices so that they can spike up for another setup, or maybe close out certain long positions that are too exuberant, yada yada. So there's a lot of things going on here. I think that it is too early for us to tell what is going to happen here. I need to look at a bit more of the numbers and see what's going on with the economic backdrop, because even though unemployment's back to where it was and non-farm payrolls were way worse than expected, this is going to pose a lot of challenges for market activity, and I'm going to have to carefully consider what is the rotation that may happen here. It's not as easy as tech is just going to buy up and financials and energy are going to sell off. Which, by the way, I'm still bullish on energy and financials heading into 2022. I've mentioned this multiple times. And I think a pullback on energy is much needed for me to buy this dip. I want to see a pullback at least, to this level right here, the $50 level, for me to pick up some XLE leaps. XLF has been on a complete tear. So this thing needs to come back, rightfully so. XLF needs to come back at least to 34, where this dual zone is, for me to start purchasing XLF. So there you have it. Lots of volatility, and I think we're going to continue to see volatility for the month of May. So buckle up and enjoy the ride. This is going to be the last live stream for a little while. I hope that you've enjoyed all the live streams thus far. If you have, throw a fire emoji in the chat, or throw an emoji in the chat and tell me, what about this live stream did you like the most? And, maybe in the future we'll be back. I'll be here for another couple minutes. If you have any questions, post them in the comments. And, yeah. Let me know what you guys are thinking. Gonna miss coffee and tea's report. This LS got my head in the game. Thank you, T. Awesome. Jeffrey, Jacob, what's up, guys? Gonna miss the positive vibes and fire knowledge. Don't worry, I'll be back soon enough. I appreciate your time, dope stream, and also breakdown market unlike others did. Thank you, Morris. I appreciate that. Appreciate you. It's definitely a bittersweet moment for me. You know, just kind of. This is a little bit of a pause for me, so that I can put out better content for you guys. And I can assure you guys that I'll be back in the future. It's just I need some time to figure out what kind of content I want to focus on for this channel. And the live streams are great, but they take a lot of time to set up for, which is not a bad thing, but in the future it may be back. Okay, I'll make announcements on IG. Also, I'll continue to be doing breakdowns every morning on the Discord channel. So if you want to, by the way, if any of you have been on the fence of joining the Discord, but you are finding it, not up to your price expectations, message me on Instagram. I want to hear from you. If you wanted to join the Discord, but you're not in there because of the price, message me. I don't want price to be something of a entrant issue for you guys, for knowledge. Okay, I've made this very clear about the courses too. If you think that the courses are too expensive for you or something like that, message me and I'll see what I can do about it. I don't want the prices to be the problem for why you can't succeed. Well, there you guys have it. That's the last live stream for a while. We'll continue to track the market. I'll continue to be putting out webinars, by the way. Webinars will still be something that we'll be doing. And then I'll be creating other kinds of content for this channel from now on. I want to focus on more higher quality content, as well as the live streams were great quality as well. But I think this reaches very few people. And the people that do turn up, I do truly appreciate your commitment and all of your efforts for being here. But yeah, I truly think that we can reach more people with better content, and that's what I want to do. I want to focus on that. Well, I'll take it that you guys don't have any questions. And I will bid you guys farewell for a little while. I'm not sure how long it'll be. But if I miss you guys, I'll be back. And I'll shout out to you guys on Instagram. So keep looking at Instagram on our page. If I come back for another live stream event, I will be back on YouTube, and I'll post it on Instagram that we're going live. Thank you guys a lot. I really appreciate it. Your love and, everything. Have a great weekend, and I will see you guys on Monday's webinar. Take care, guys. Bye-bye.